All right. Good afternoon, good morning, and good evening to everyone who is here. And welcome to the CAREC Innovation Network Members Workshop. And today we'll be addressing investing in frontier and emerging markets by speakers Hilary Ephraim, the Senior Associate at SOSV and Orbit Startups. I will give a proper introduction to Hilary later. And before we start the meeting, I would like to kindly request you once again to have yourself muted. And if you have questions or comments, please feel free to write in the chat box. My colleagues will monitor the chat box, and you're also welcome to raise your hands if you have any questions. And we would appreciate if you could rename yourself with your name, your companies or organizations. So we have, when you ask questions or comments, we have a bit more background. And before we start the event, I would like to also announce that our original speaker, Mr. Oscar Ramos, was not able to join us today, unfortunately, because he actually just entered China today. And as you might know, we have a very serious landing restrictions, traveling restrictions, and there was also some quarantines and everything. So it's very unfortunate that he will not be able to join us. But still, we have the Mr. Hilary Ephraim to share his insight on behalf of the company, Orbit Startups, and SOSV on the very also insightful topic. And before I introduce Mr. Hilary, let me first talk a little bit about Asian Development Bank, CAREC, and what we are doing for the CAREC Innovation Network and the members workshop. So Asian Development Bank is an international organization that we focus on providing a prosperous, inclusive, and resilient and sustainable in Asia and the Pacific. We aim to assist our member states, our partners, by providing loans, technical assistance, grants, and equity investments to promote social and economic development in Asia and the Pacific. Under the Asian Development Bank, we have this CAREC program. I mean, we always talk about CAREC, but what exactly is CAREC? It's the Central Asia Regional Economic Cooperation Program, which is a partnership of 10 Asian countries, ranging from Azerbaijan, from China, to Georgia, Kazakhstan, and altogether 10 member countries and developing partners to work together to promote sustainable and inclusive economic growth and poverty reductions in the Central Asia. And under the CAREC program, today with us is the CAREC Innovation Network. The network is aimed at building a community of business innovation leaders with the aim to promote regional economic development by supporting startups and new ventures in the CAREC region, also providing support to access to finance and scaling up startup and innovation ideas in the CAREC region. Under the CIN, the CAREC Innovation Network, our main service includes training and capacity building, networking, connecting, and strategic partnership, as well as the CAREC ecosystem maps. And today, the members workshop is our regular events that we aim to bring together our ecosystem builders and stakeholders to share knowledge, share insight of the innovation ecosystem. So with that, please allow me to introduce our today's speaker, Mr. Hiroi Ephraim, the Senior Associate at SOSV and Orbit Startup. Mr. Hiroi, are you here with us? Yes. Hi, yeah. So Mr. Hiroi has a very extensive expertise, including portfolio management and deal resourcing, research, member relationship, and marketing. He has also a lot of experience in angel investment. He previously worked as a program manager for Angel Invest Group in Shanghai, China, which is an angel investor based in Asia. And that is not all. Mr. Hiroi he also enjoys performing stand-up comedy. That's very interesting, and we like to really hear your presentation and your talk to us. So it is very honor of us to have Mr. Hiroi with us to share his insight on investing in frontier and emerging markets. Now, Mr. Hiroi, the floor is yours.
Awesome, appreciate it. Thank you for the kind words. Now the pressure is on, that everyone knows that I'm a comedian. So hopefully I'll try to, not destroy any of my jokes. So first things first, today's topic, we'll be talking about investing in frontier and emerging markets. As usual, we do have to get these slides going. Perfect. So as has been said before, I'm Senior Associate at SOSV and Orbit Startups. Would like to give you guys an opportunity to first understand what Orbit Startups is as we get into this conversation. So there you go. So what is Orbit Startups? Orbit Startups is a program that has been funded and is funded under the umbrella of SOSV. SOSV is a global VC fund. We invest in primarily 3 sectors, which I'll talk about in a minute. But Orbit Startups is one of them. And our mission and vision is around scaling breakthrough startups from all over the world, specifically from emerging and frontier markets. So basically, today's topic is hand in glove, basically what my team does at the Orbit Startups. Okay. So overall, SOSV, we have a global portfolio. Here, these dots give you a sense as to which areas we've been investing in. North America is a hub, and Europe and primarily South and Southeast Asia are hubs as well. And recently, we've been also beginning to invest in markets such as Sub-Saharan Africa and going a bit deeper into LATAM. As a fund, we have about 1.4 billion assets under management, and we invest in 3 main verticals, as I mentioned earlier. Hard tech through Hacks, that's our program there, where they focus on hardware, primarily enterprise-based hardware that's supposed to scale from 1 to 100. It's one of the things that they look at. And we've been actively one of the most active investors in hardware since we founded the program in, I believe, 2013. Internet, we are Orbit Startups, and life sciences, which means therapeutics and cellular biology. We have ND Bio, and our offices span across the world. We have team members in San Francisco and New York, which is where our ND Bio and Hacks team sit. We have our back office in Cork, Ireland, so right next to the Apple guys. And myself, I'm based out of Shanghai, and it's one of our biggest teams in Taipei. And then we also have a big facility in Newark and Shenzhen, both for our hardware teams to incubate and strengthen some of our hardware investments. And then Kuala Lumpur and Delhi, which got a couple of folks there, but more or less boots on the ground, as well as Tokyo. And Generally, these are our stats from last year, and hopefully when the 2022 stats come out, which should be in a couple weeks as the year's coming to an end, hopefully we have equally as good numbers. So last year, we were the most active seed investor in the world. We've been deploying capital left and right, despite, in 2021. Ninth in the USA, 10th in Europe, and as per PitchBook, we're fifth most active in ROW, which is rest of the world. Some might say emerging markets. And specifically with regard to emerging markets, here are some of our other rankings as well. We're quite active in Pakistan. I think last year and this year we have approximately 17 portfolio companies in Pakistan. So we're quite active in the last couple of years. Southeast Asia, we continue to be a very big market for us. India, also quite large. We have about close to 50 portfolio companies in India. But a lot of the companies that we also invest in also have headquarters in Singapore. As such, Singapore is also another big jurisdiction for us. And the areas we focus on as a fund are primarily health tech, climate, and robotics. Climate being a huge one. We had our inaugural climate summit a couple of years ago, where even Bill Gates had a chance to speak, and all the big VCs also chimed in. We did it again earlier this year in October, where we also had an offline session in Shanghai as well. Maybe some of you guys were able to join. And so, so climate is a big theme for us. And then just from our historical portfolio, food tech, FMCG, and supply chain are also areas that we've spent a lot of time and resources in. Now, as Orbit, how do we support our startups? We really focus on three main things. Fundraising is one. As any sort of fund, our goal is to fund our companies, and hopefully they're also in a position to get more funding later. So things of that nature is quite important for us. But none of that is also going to be possible without having invested in growth. So we have a dedicated growth team, and most of our team as well share the mindset of traction first, fundraising next. And for companies that are working in emerging markets, becomes quite important, and I'll be discussing that a bit later as well. And then mentorship is also a big area. So we have about 500 mentors in our network. And these are all folks that are keen on getting involved with startups one way or another. Some maybe are not in a position to do a startup and they want to support. Some want to have visibility on what's happening in the market. And then for the most part, though, generally speaking, all these people have done a thing or two in entrepreneurship, and it's an opportunity for them to give back and work with the companies. And so as us, Orbit Startups, who actively invest in many companies, we give that pipeline of folks to mentor and work on and see what the next big thing is going to be. And so that's always exciting. So with these three pillars, we work with our companies to provide them the service, in addition to other things such as our community and like perks, so general resources. So as perks, we have about 1.6 million worth of perks that our startups can access. And most importantly, a lot of our services are lifetime. So traditionally, it's very easy to associate Orbit startups with accelerator programs, but the difference with us is that accelerator programs have a start and end date. We only have a start date. There's no end date. And I myself, as an associate working as part of Orbit Startups, I not only cover companies that we just invested in a couple months ago, but I also work with companies that we've invested in as early as 5 years ago on a regular basis. And when I say regular, I don't mean quarterly. I mean bi-weekly and at most monthly. So a lot of support given here. And then, as I said, most of our portfolios for Orbit Startups tend to be in the emerging market space. So excited to really share how our portfolio has been able to educate us and myself on the topics that we're going to discuss today. So in general, right, business ventures and investments in frontier and emerging markets. What about them? Let's talk about them, right? And so in general, there's no denying that the opportunity is huge. The opportunity is huge. Developed markets, one of their biggest challenges is that any sort of product that is being created or sold, quite often it's a substitute market, in which case the innovation is relatively limited for the market. That being said, those same opportunities in emerging markets for a lot of times, and also frontier markets, they're brand new. They're new services that people would not have been able to address. A huge example of this is, for example, what we see in fintech, right? For a long time in developed markets, banking has been the main source of financing for many individuals. Along comes fintech, which enables people that don't have bank accounts to be able to exchange value. And that value always is ascribed to some sort of currency, but sometimes it's not. End of the day, as long as someone decides it has value, it is value. And that interchange of currency and monies and value literally stripped banks power in these emerging markets off their legs. And through that, we can see like markets like China, for example, who's been very interesting in this, where solutions like fintech, e-commerce, all those sort of things that were not nearly there as fast as emerging as the developed markets, such as Europe and North America, were able to bypass a lot of existing barriers to make it possible for the consumer to not only have the same quality of life as that of developed markets, but more importantly, even optimize it and take those learnings away. And so these things are one of the reasons why emerging markets are so exciting. And case studies such as China allow us to really look at what's happening in markets where there's a lot of room for growth. Those markets where there's a lot of room for growth tend to be markets that have quite a big population. So we're thinking about markets like Indonesia, markets like India, and markets like Nigeria, where populations are quite large. And because of such a large sample size, trends and opportunities for new products and services to be consumed as the economy grows also increase, which is basically, in a nutshell, what has happened to China. Obviously, no two countries are the same. That's one thing I do want to highlight for everyone as well here, right? No two countries are the same, but there's also a lot of pattern recognition to be appreciated in working in emerging markets, because what has happened in China, we've actually seen happen in markets like India. And because things are happening in India, where culturally there's a lot of overlap with a big market like Pakistan and also a big market like Bangladesh, we're seeing a lot of the things that we saw happen in China 10 years ago occur right now in these markets, and thus concluding that a lot of the trajectory and a lot of the consumption habits of a growing middle class, which is what's happening in those countries, will be consistent with what we're seeing in China, more so than what we would see in markets like North America or even Europe, because of just the disruption that's happening in existing infrastructure. So I mentioned fintech earlier. A key example of fintech, well, obviously in China, is the whole situation with WeChat and Alipay, which have been, I think, the main source of people's transaction. How is that common in other countries? Well, in Kenya, you're seeing a big player such as M-Pesa come in, where a huge amount of the country uses platforms like M-Pesa to pay. And M-Pesa is basically a fintech tool that's being distributed through the telecom network, Safaricom. But nonetheless, M-Pesa basically has enabled people to move away from cash. And cash, the paper, right, or the cloth, depending on which country you're from, as a material, is at risk, can be burned, can be stolen. But being able to have it in a digital platform is definitely a place that, for example, telecom beat out banks. That probably wouldn't happen in markets like the US or in Europe. Well, in Europe, I guess you can say the UK, it's a lot of that's happening. But what I'm trying to get at here is that there's examples of innovation that has accelerated in a faster pace than developed markets, and therefore there's things good to note. So those sort of things that we saw, for example, in China with like the WeChat Pays and the Alipays, started coming along into Africa relatively recently, and are becoming much more common as well in South Asia and Southeast Asia. Grab being a good example here, Grab and Gojek being a good example here for Southeast Asia, where they've enabled payments to go through. And then same thing with insurance, right? So insurance is also another big product where we can see some of this happening as well, where traditionally in big markets, such as the developed markets, insurance products are quite monopolized by the big players. But then in emerging markets, where there's still a demand for some sort of insurance, people were creative enough to create microinsurance, which is much more common in such markets than elsewhere. So, but basically, pattern recognition is very big, and that's something that we've focused on quite a bit. And as investors and as also people that are looking to study such markets, we always recommend looking at the China approach, because China was one of the big frontier markets turned emerging market that enabled a lot of that defied a lot of what we thought about the country's journey in development. So one of the key challenges that these emerging markets and frontier markets have is that there's just simply less capital in emerging markets, and capital is the oil that allows all this innovation to happen, right? So then one of the key challenges is how do they get capital? But the problem is, though, investing in emerging markets is risky. There's a lot of risks. For one, emerging and frontier markets, I don't really have to go too deep into this, but as everyone knows, because of the economic quality of these markets, political stability is something that's always going to be at risk, right? And the last few years have also shown us that economic stability does not always necessarily mean political stability, but nonetheless, history has also showed that emerging markets and frontier markets are the ones that have quite extensive political problems in which policies sometimes can change over the day or may not even be enforced. So policies, for one, have two angles. So you have to look at their existence and their enforceability. And where emerging markets sort of lack at is the enforceability. But over time, that gets fixed, and that also creates adjustments to folks that have injected capital in those areas. Economic risk and currency risks are also things that are also quite linked. A good example is what's been happening in Pakistan. Right? Pakistan for the last year or so, as a market, has been experiencing huge currency dips, especially as the US dollar continues to strengthen, with also the war happening in Russia and Ukraine. All those are things that have huge impacts into the local economy in Pakistan, in addition to the big flood that happened also. These are all things that hit the currency. And when the currency gets hit, one could argue capital injection from abroad becomes more efficient, but also revenue generation gets a big impact as well, because in a lot of these markets, they're earning their local currency. And if they're earning the local currency, that means if the currency takes a hit, their performance as a company also takes a hit. So these are some things that I think investors, generally speaking, think about. And these are some things that we also have to consider when supporting some of our companies, where how are they being cautious about the economic outlook of their country, and are they taking the data points necessary to address some of these risks for themselves. However, that being said, there's also so many reasons why we can invest in emerging markets. One of the reasons we like to invest in emerging markets, besides the opportunity for growth, is that it also enables us to take learnings from different portfolios across different markets and share them, right? For one, in emerging markets, from a USD perspective, as our fund is USD, when investing in some of these companies, the dollar goes further, right? To give you an idea, 100K USD to a company in, let's say, Philippines, makes a huge difference as compared to 100K for a company that's based out of San Francisco, right? 100K is the salary of one person. 100K can run a company in these markets for 12 months. So since the US dollar goes further, but then the economic impacts are also much more visible is something we appreciate. And then also from an asset perspective, diversification of your assets is always a good thing from an investor's perspective. Although, you know, the idea is that you want to invest in things that are going to be able to return quite well. But one of the reasons why we like to invest in these markets is the dollar goes further, the growth potential is huge, and we really love to see the China playbook at hand, because this enables some of the innovations that are happening in some of these emerging markets to be also be passed down to the frontier markets. Key difference here being, I guess you can say emerging markets are the ones that are somewhere in the middle income area, and frontier markets are the ones where you have players that are in the lower income area. So this exchange of innovation is quite a big deal. We see a lot of this happen in the B2B e-commerce space, for example. With B2B e-commerce, in already developed markets, this is more or less a solution that there's multi-layer solutions to this. But in a lot of emerging markets, procuring from suppliers and selling to suppliers is complicated. And there's not that many people that are in the middle facilitating all this. Yet, the business models of all these players across many geographies is basically the same. And the business challenges, relatively the same. As such, we have had a lot of success investing in companies that have the model of B2B e-commerce, where they're enabling corner shops or basically other businesses to be able to sell and buy on their platform. Those sort of platforms have been successful in our portfolio, and they were quite attractive actually for a lot of investors in the last year as well. And because we've had a few of those companies in our portfolio, being able to have them connect, like exchange ideas, it's also been something that's quite valuable, and some of the learnings from there can be applied. As always, those companies, they always look at companies like Alibaba as one of their you can say inspirations, because Alibaba has been able to do that well and was one of the first ones there. So then readopting Alibaba into these markets where it makes sense, in the same way that Alibaba was there when the market was still nascent. There's a lot of parallels there that can be drawn. Second key topic that I also want to talk about is also what role do ecosystems have in preparing startups for investment. So as I mentioned earlier, a couple minutes ago, capital is the oil to making these companies and innovations possible. Capital is what now enables most things in the world to run, but especially more so in these markets. And one of their biggest challenges is how can they fundraise beyond the small checks that are available in their market. As I mentioned earlier in this presentation, there's simply less capital in emerging markets. Then how can they do? So what can emerging market players and frontier market players do? Well, they have to fundraise, and they have to fundraise from capital from already established markets. And for those, just as there are language barriers, there's also other communication barriers that exist. And therefore, the roles of ecosystem builders, at least in these markets, generally speaking, is for one, to build those networks, right? And a key thing for building networks, generally speaking, we see them in three ways. One is by first facilitating entrepreneur communities, because entrepreneurs, there's a lot of shared knowledge that can be taking place. And running a company in an emerging market or a frontier market is so much different than running a company in more established markets, because not only the cultural differences, but then also for the cash flows, and then also for the education standards. Your management skills are going to be tested in different ways. One is not necessarily better than the other, but they do require different set of skill sets. And therefore, entrepreneurs always have that challenge of being able to get the best out of their employees, and entrepreneur communities enable that to happen. But more importantly, entrepreneur communities also have their own relationships, potentially with capital abroad. And thus, such communities are helpful in bringing in investors accordingly. To give you an idea, I mentioned Orbit Startups and Pakistan, right? So Pakistan has been a great market for Orbit Startups because we were lucky to invest in one entrepreneur who was quite well connected. And through his connections, we've been able to refer a lot of really other spectacular entrepreneurs. End of the day, we still made our decision independently, but we wouldn't have had the opportunity to evaluate those opportunities had we not been connected to that entrepreneur. And the same is happening across some of our portfolios where they've been able to get introductions and facilitate investments through their own network of fellow entrepreneurs, right? Accelerator programs also offer value to these communities because they are a platform to just get a bunch of resources for entrepreneurs. And entrepreneurs in such markets quite often are resource scrapped. They need to be quite scrappy. Accelerators help that. But more importantly, I think accelerators vary in quality and I guess we can say effectiveness, but they do solve the problem of getting a community together. And network effects, such as like your net worth is your network, or your net worth is your network. I'm sure some of you guys have heard this statement before, but basically just means the value of your worth is how strong your network is. And accelerator programs, regardless of the quality of their content or even their support or their cash, they do offer communities. And as such, those communities are also a good place to tie into the entrepreneur community that I mentioned. And then also service providers. So these ecosystem builders, getting people in place to provide the right services for companies to be able to scale abroad or get capital from abroad is very important. This is much more relevant in legal. I say this in legal because for obvious reasons, more later stage capital prefer to invest in jurisdictions that are quite friendly and quite easy to be able to be supported in. Therefore, those folks that are connecting the services that are needed for incorporation in select markets, it would be wise to also have them be building out those services, or at least have some sort of connection to those services in place. And those service providers also solve the issue of networking that I mentioned earlier, because those service providers have much more visibility on what's happening in the market, and therefore can enable to be the bridge between those folks that have capital and the folks that are looking for capital. Okay, so this is a list of various partners that we had the chance to work with over the course of our lifetime. A lot of these guys are corporates, but these corporates, again, also have quite their hands full in these emerging markets. One partner that we do want to highlight that has done a good example is Pack Launch. Pack Launch basically is a platform for investors that are looking to invest in Pakistan. And one of the key things they've been able to do well is not only have they been able to create conferences and get a set of resources in place, but they've been able to also tap into the Pakistani diaspora. And then tapping into the Pakistani diaspora has been quite useful because the Pakistani diaspora, given the large market it is, has a lot of very important and powerful people all over the world, specifically sometimes in Silicon Valley. And as such, Pakistan, to a certain degree, has been able to actually get some capital to inflow from Silicon Valley and also the UK because of Pakistani expats that have been able to make their money abroad and are willing to support the ecosystem down there. And so this is a great example of organizations that are building great pipelines for capital and also just ecosystem building between emerging markets and developed markets. Okay. And these ecosystem builders also have the opportunity to enhance the best practices that these companies are doing. So for example, one of the things that we do at Orbit Startups SOSV, and then also what other programs do as well, is they really focus on simple things like email updates. Okay. For raising capital from markets such as the US or Europe, corporate governance and things of that nature are quite attractive. Because of the slide that I mentioned earlier, there's a lot of risks investing in emerging markets, especially because you're unaware. And so doing small things that give investors, especially early stage investors, comfort in your system and processes are always going to be good. So one of the best practices that folks in the emerging market space can do, and players like us continue to do, is evangelize the concept of email updates, because clear communication and things of that nature are ideal, and to be honest, keep relationships warm, because relationships are basically the funnel that allows capital oil to get into the markets. Okay, so here are some examples of like updates that we coach our startups to do, where they focus on basically reminding investors and stakeholders who they are, having a very attractive title as well, explaining what's happening with InsurTech, for example, or having increases in orders, or maybe even a product update. Those are all quite attractive things that enable people to open the email, read about what's going on, and build confidence that there are great things that are happening in markets like India, Thailand, and in some cases, Southeast Asia. Okay. Visibility is also another big thing. So one of the things that we focus on with our companies, and that other folks should also be helping other companies also focus on as well, is having more visibility in platforms which later stage capital operates in. What does that mean? Well, if the goal is to get financing from later stage capital, specifically from abroad, then that means being able to speak their language. One of the ways you can speak their language is by having properly updated materials on platforms such as Crunchbase, Preqin, or PitchBook, because these are the resources that those folks know and are more comfortable with, right? As such, getting service providers, as I mentioned before, or even some of the accelerator programs, or even having investors such as ourselves work on startups on getting their visibility out there is a huge step forward in first being able to address some of the concerns that potential investors looking to invest in such markets might have. Okay. And another big one is incorporation. So incorporation is one of the biggest things that really ail startups from emerging markets, because usually an entrepreneur, the thought process is, there's a business problem here. I think I can solve it. Let me create a company around this. It's very easy to want to create a company in your local market to address whatever business challenges you've seen in your market. Very understandable. Problem is though, as I mentioned very early on in the beginning of these slides, capital in emerging markets does not exist. Therefore, capital needs to come from abroad. Capital that comes from abroad is very unfamiliar with very local laws and local jurisdictions. As such, it's very important to have incorporation in markets where, or in, I guess, in jurisdictions where investors are going to be very comfortable, especially later on. So Singapore for many emerging markets is great. Delaware is great globally for anybody. So many companies out of Latin America, out of Africa, out of a significant amount from Asia are incorporated there, right? And then for the Middle East, Abu Dhabi tends to be quite attractive as well. And Abu Dhabi, Delaware, and Singapore, across all three places, capital flows in and out very easily. So then having a parent company there, and then as a subsidiary in the local market, is a structure that's been quite helpful for many companies in addressing fundraising. Because if they're a local company, fundraising beyond angel stage, it gets quite difficult. So for VCs and institutional capital to come in, they need to be able to invest in a jurisdiction which they have the resources to be able to understand, and then also defend themselves. That's a big part, right? And the reason why Singapore, Delaware, Abu Dhabi are easy is because Singapore, Delaware, Abu Dhabi have a bunch of lawyers, the market is saturated, so many companies are incorporated there. There is a standardization that everybody can follow and be aware of and be informed of. So this is like one of the lights in transparency. And accelerator programs and service providers that work on these sort of things are great for these emerging markets because they address this gap in understanding that entrepreneurs have from capital providers from abroad. Okay. And then most importantly, which is actually quite relevant these days in 2022, is having positive unit economics. In 2021, the market was quite active. And if anybody's been following the venture space, there was super high valuations. And anybody could raise. If you had an idea on toilet paper, you could probably raise. I'm exaggerating. That probably didn't happen. But we've even seen in our portfolio companies that have very little traction be able to demand high valuation. Now the market has changed with the war happening in Russia and Ukraine. Climate continues to be an issue. The US and the public markets being not so attractive. You're seeing a lot more conservativeness in capital outflows from existing sources of capital. And as such, the attractiveness of investing in emerging markets becomes less. Therefore, companies then need to be able to build a big case for them to be funded. So positive unit economics are things that we've been evangelizing for most of our companies, because if you have good positive economics, meaning you spend $1, you make more than $1, that's attractive. And because so many companies in general at the early stage aren't able to do that, they tend to lose out. And companies that are able to showcase that rise from the ashes of what is a mess of an economy right now. Okay. Two more topics before I am done. I understand that it can be very monotonous to hear things around fundraising, but we're here to chat about that. I think my final topic also is around investment instruments. Many investment instruments, such as the following, right? We have equity and we have SAFE, KISS, ACE. What are these words? Equity is pretty straightforward. This is when companies are able to fundraise and they exchange money for ownership in the company. That's pretty straightforward. We've all seen this. SAFEs, most folks have also heard about this as well, but basically SAFEs are a type of convertible, and companies being able to be comfortable with SAFEs is quite important. KISS and ACE are other types of SAFEs that I mentioned, or convertibles, you can say. ACE is our own SOSV created convertible, but nonetheless, across these three instruments, they're all convertibles. And one of the key things that emerging markets need to, or companies in emerging markets need to understand, is that these instruments do exist and they're easily governed in jurisdictions that I mentioned before, like Singapore, Delaware, Abu Dhabi. And they're a great tool for getting cash in quickly and be able to get to grow and enable those companies to be able to get the positive economics they need and then raise a bigger round, hopefully for equity, because equity is one of the best tools you can have for shares. Because with SAFEs, KISSes, and ACEs, you risk unlimited downside, which I can talk about if people have questions. Okay. And all these help with the idea that emerging markets, one of the key problems they got to focus on, or companies in emerging markets and frontier markets, one thing they got to have to focus on is how they position their companies. All the things that I mentioned earlier about being incorporated correctly, using the right instruments, positive economics, and building out your network, right? All these sort of things are all in a good position to help companies create better positioning to get the capital. Because once they get the capital, their job is to grow and not mess up. The numbers will always speak for themselves. The problem is, though, the credibility of those numbers are always going to be harder at the very beginning. And thus, I want to conclude my comments and thoughts on emerging markets and how they can be better supported by ecosystem players. And then also just generally our philosophy as Orbit startups for emerging markets. So here are our relevant QR codes. If you want to give them a scan or maybe check us out on social media, Love to hear from you guys whenever, at any time. Yeah, so we'll happy to take questions now if there are any. I'm sure I've spoke quite a bit. Happy to address any questions that are there. I see there is a question here in the chat from Lufsan.
Sorry, just 1 second, Hilary.
Yes.
Thank you so much for the presentation. Before we move on to Q&A, can we quickly take a group photo? Yeah.
Sure.
After the group photo, we start to address the questions.
Okay, let me unshare my screen then.
Yeah, may I now invite you to have your camera open so we can take a group photo as a beautiful memory of our event today. Sharing knowledge, building connections, meeting new people.
Wow, it's good to see the faces behind all these names, huh?
Yes.
All right. Cool.
Taking the picture in 3, 2, 1. Okay, once again, 3, 2, 1. One more time, please. Can you please switch on your cameras, the other participants as well?
Where's your camera?
You're all invited to switch on your camera.
Yeah, Mom, where's your camera? Huh?
There is some issue with my camera, that's why I couldn't switch it on.
Allegedly, okay.
Yeah,
Cool.
okay. 3, 2, 1. Thank you, everyone.
We'll appreciate it.
Everyone,
Yeah, okay.
Yeah, we might just meet each other one day soon. So it would be nice to see each other online. So thank you so much. Thank you, Harry, for the very, very insightful presentation. I enjoyed it so much. And I can see that we have some questions on the chat already. Yeah. Okay. Would you like to take the first one? And also please raise your hands if you have other questions.
Yeah, so the first question is from Lufsan, where it asks, does Orbit provide only private equity? Does it have a fixed income team specialized in Central Asia? We do not have a fixed income team, period. So regardless of the jurisdiction, we only do private equity, or specifically venture capital. Venture capital, as you guys know, is a type of private equity. Given the instruments that I mentioned before, like the safes, the whatever, sometimes I guess technically we do invest in debt, convertible notes. But specifically, we're just purely a venture capital fund, and we deploy capital effectively for ownership in companies. Cool. Anyone else have any other questions? Happy to field them, whether it be about Orbit or whether it be our investment thesis in the region, or also some of the things we might have seen in the markets. I understand that my presentation had a bit of strong bias towards Pakistan, but yeah, we're quite active in there, India, recently more so Bangladesh as well, and quite active in Indonesia as well. Indonesia, we have well over 10 startups. Wow. Cool. So based on what I'm hearing here, it doesn't seem like there's any more questions. If there are, as I mentioned, feel free to get in contact with us. Daniel, do you have a question?
Sorry about this crazy picture here. I don't have a camera. I have a screen here and a laptop here. I'm actually an American. Nice to meet you, Hiro, and thank everybody for this presentation. I'm actually an American who's previously worked in Kyrgyzstan and Tajikistan, and I just moved to Uzbekistan. So I was just wondering, you hadn't really touched on Central Asia, and of course, Uzbekistan only recently opened up 5 years ago. So I'm just wondering if you're looking into, maybe I missed it. I was there for most of the presentation. What are your feelings about the Central Asia, maybe the Caucasus parts of the former Soviet Union? And thanks again for your very good presentation.
Cheers. So we're open to opportunities in Central Asia. We also understand that that market is also a market that has potential, but has not really been tapped into. But for the moment, it's not like we're avoiding it. We just haven't had any good opportunities come our way. The closest thing to former Soviet is we've had a couple companies come out of Ukraine and also the countries up north, I believe, not Latvia, but one of the countries there. We have a couple companies in right next to Russia, and also companies in Russia as well. But we haven't made any investments in Central Asia. We're open to it. Like I mentioned, it's just about we just haven't had the right deal flow yet. And when we do, happy to take those opportunities, especially where they make sense for us and where we can support as well, right? We don't necessarily just invest in any types of companies. We focus on software, internet with a B2B angle, hopefully with opportunities to go abroad. We also understand that those Central Asian markets, as a market in general, they're not the largest. Therefore, they will have to go cross-border at some point, in which case there might be a fit there. It's just a matter of like, are there products there that we know a thing or two about we can support with our portfolio? And at the moment, we just haven't found anything interesting yet. Largely not because we don't think there is. It's just, I believe we just haven't had a chance to really study it, and we haven't had deal flow coming in that direction. We've been more pulled towards the African market these days, especially in the last 8 to 12 months. And then Latin America has become even more hot in the last 6 months for us.
Got it. I appreciate your answer. Thank you very much.
Indeed. And then Lufsan also had any questions about portfolio of investment in climate change mitigation and adaptation. Yes, we have a few companies in our portfolio, especially on the HAX side, HAX and IndieBio side. Unfortunately, I'm not too well versed. I focus more on the software side. And on the software side, I can actually speak to one company very well. We have a company called Octopus out of Indonesia. They just raised a significant round and they're just growing like a weed, because what they basically enable to do is they help with trash collection in Indonesia. And so one of the challenges in markets like Indonesia is that there's a lot of folks that are in the recycling business, but it's very fragmentized and it's sort of, I guess you can say, there's a bit of a mob element to it because people have their own jurisdictions that they work on. And so it's very fragmented, but picking up trash and recycling it for change is a thing that happens in Indonesia. And so these guys created a platform to organize all of this. And with very little funding, have been able to grow with huge GMVs by enabling trash pickers to be organized through the app, collect their trash, get paid for it, and then obviously take a chunk for their payments as well. And through that, they've been able to clean up the streets of Indonesia. Main market right now is Jakarta, but I think they're active in, I believe, 7 other cities as well. They just closed a $5 million round earlier this year, and they're looking to grow further. So that's one of the companies we have on the software side. On the life sciences side, one of the cool companies we have is a company called Notco, which I believe is already hit unicorn status. They basically do cellular biology, where they basically help create milk without the cow and pork without the pig. Basically meaning cellularly, they're designing food products such as like meat and dairy, all this without the livestock. And livestock, as you guys know, huge contributor to climate change. Need I say more about cows farting, right? All that methane going onto the air, useless. So as such, being able to at least have a product that is desired by people, which in this case, livestock, meat, dairy, all those are the things that have a huge impact on the environment. They've been able to develop it in labs and package it and sell it. And they also, so they hit unicorn status. And yeah, so that's one example of a company that's addressing climate change mitigation, not directly through the fumes and the things of that nature, but through how people are consuming in their carbon footprint. Yeah.
Thank you, Hilary.
Mhm.
So because of time, I think we're not taking more questions, but please feel free
Okay.
to get in touch if there are more questions. If you have more questions, I believe we have the contact of Hilary, right? We have also the official accounts. And for now, I'm sharing a feedback form in the chat box, and I would appreciate if you could take a few minutes to write the feedback form, tell us how you think about the events, the presentation today, the sharing today, and this will help us to improve our workshop in the future. And as you take time to complete the feedback form, it would take 3 to 4 minutes. And yeah, I would appreciate if you can all fill the form for us. Meanwhile, I would like to also talk a little bit about the CIN network. We aim to organize more member workshop in the coming future. So if you have topics, best practice, good cases that you would like to share and you believe it would help our members, our startup ecosystems, please feel free to reach out to us and we can organize this kind of workshop for sharing, for connecting, for also building collaborations and partnership, because that's what the Innovation Network is about. And also we are opening for new memberships. So if you would like to join us to become one of the CIN members, please get in touch with us in the web page where we post this event. I'm gonna just add the link here again. We have the contact of my colleague Hira, and she is in charge of the CIN membership. So please feel free to reach out for joining as a CIN member. Here I'm putting the link to this event. So I'm just quickly checking the feedback form. Please kindly take your time and share with us your comments, your feedback for us to improve in the future. And with that, I really want to thank everyone for joining the workshop today, and especially thank you, Hilary, for the very insightful, very knowledgeable, and very interesting sharing. I personally enjoy it very much, especially the best practice part. And I think that's what the CIN workshop is there for. We share knowledge, we share experience and good cases for each others to learn and to build a more healthy innovation ecosystem.
Indeed, my pleasure.
Thank you. Yeah, sorry.
I said my pleasure. Yeah.
Yeah, and I look forward to more cooperation with you, with Orbit startups, and with all the members in the CIN network. And with that, I think we can close the workshop today. Thank you so much. I hope you all enjoy the workshop, and I wish you a very lovely day. And enjoy the evening, enjoy the rest of the day. Thank you so much.
All right.